Good morning. This is Jim Barlow of OakTree Premium Finance, and I've been using the Alchemist theme for uh, quite a while now, so I'm still the Alchemist. Today, we're going to talk about executive benefits and how Kaizen can fit. It's going to be about a lot of detail about executive benefits. We won't be a long time, but I think it'll be helpful to kind of review everything in this category. There's a good long list to get started with. Why do employee benefits matter? Number one, to attract top talent. Um, Without benefits, a lot of people will not come. Two, retain key employees. You got to retain those employees you have that are important. Meet today's expectations. Benefits aren't really optional, they're expected by modern employees. Improve productivity, they're happier, less stressed, more focused, more engaged. Address real fears. What are the real fears? Medical bills, premature death, retirement security. These are the things that families are worried about. And as you provide them, it helps them to stay and want to stay. Health and well-being. Um, you got to have a healthcare plan, I really think. But we'll be talking about and reviewing these. Enhance your brand. Be the place you want to be and be the place people want to be. There are some pretty big challenges in this world of ours. Rising cost and retention struggles. Um, the younger generation, millennials, have a tendency to move more often. Employee benefits are costing more, over 47% more expensive than 10 years ago. Um, Despite spending more, turnover remains high in our country. Um, there's a statistic I found: 23% of millennials in the workforce, 12.88 million, plan on changing jobs in the next 6 months. That's serious. What are the average costs when you lose an employee? New training, 100 to 150% of the salary for technical positions, to 200% plus for salary top management. It sets you back when you lose someone. Employees now prioritize flexibility, wellness, and purpose over traditional perks. Many businesses are paying more for benefits employees don't value the most. So you need to look things over, think through your plan and what's going to really do the job. There are the mandatory and shoot, government involvement, and I guess I'm happy with this. Social Security and Medicare, employer contributes half. So the employee is paying 6.2% to Social Security and 1.45% to Medicare, but the employer is too. They're giving a benefit to help pay for this benefit. Workers' compensation, being injured on the job. This costs 0.5% to 3%, varies. And unemployment insurance provides income for eligible employees who lose their job through no fault of their own. Oops, I better fix that lose next time I present this. And it costs 0.6 to 6%, and it varies by state. So there are mandatory things that employers have to provide, um, and that's also certainly expected. They know that's coming. Um, Least valued employee benefits. I thought this was fun, interesting. Office perks, free snacks, games, fancy coffee. Not that important. Holiday parties, company swag. Not that important. Generic wellness programs, step challenges, newsletters. No. Rigid or minimal PTO. Um, they want time off for sure, but if it's too rigid, that disturbs them. One size fits all healthcare plans. Um, they want more flexibility, and traditional 401ks with poor matching. Some employers think they can set up a 401k and not have a matching or a small matching, and that discouraging to people saving for retirement. So these are the least valued employee benefits. I thought it was interesting. So what are the core benefits? You probably know these, or at least most of them. Health insurance, 70% have access to employer-sponsored medical coverage. In our country, 70%. I guess that's good, 30% not. Um, if I was looking for a company to work for and they didn't offer health insurance, I'd scratch them off. Probably you would too. Paid time off, 79% provides this. That's important too. People want this time off when they get sick and for vacations. Retirement plans, 67% have access to defined contribution plans, 401ks. Um, that's good, 67%. And again, it's kind of being expected. Um, then some of the areas where we're not as well covered in our country is disability insurance. Only 35% have access to short-term or long-term care coverage. Life insurance, 53%, better than 35. Long-term care insurance, only 20%. And yet these are the things that are starting to worry people. Do I have enough insurance? And I actually have a friend who, oh shoot, how do I say this? On the larger side of life, and works for a state government entity. And I know he's not going to change or move to a different company because of his group health insurance, his group life insurance that he has at the place where he has, because he needs it and he has to have it and he can't get it on his own anymore. So he's retained, he'll be retained as an employee that the entity he works with for life because they offer that. So you can see how in certain circumstances is really important. There's also voluntary benefit employee plans. Health Savings Plan, HSA, interesting. Long time ago when I was with Zions Investments and Zions Bank, they offered a health savings plan. And I looked over the numbers. I was an investment guy then too. And I said, wow, I've got to have this. And yet only 36% today do this voluntary plan. I remember sitting around the break room at lunchtime talking to bankers saying, oh, you should really sign up for this health saving plan. It'll save you a lot of taxes. Anyway, these are the voluntary plans. There's the wellness programs. About 50% participate in that area. Dental and vision insurance. Um, Interestingly enough, most of my life I didn't think that was very a good value to do dental and vision insurance. But I noticed that as I get older, it seems like teeth crack. Had two last year. Um, so I picked up some dental insurance, which will cover a lot of those things. Tuition reimbursement, these are the voluntary things that um, it, it doesn't cost you anything to offer it. Things you need to look into and understand, review them. So Executives with high income. The 401ks have contribution limits. It's not enough, even if executives max out uh, to provide for retirement. And sometimes because they're overpaid, they're restricted on what they can put into a 401k, even less. So it's not 401ks are not doing the job for the higher paid people. They need a supplemental retirement plan. Here's some options for you to think about. Non-qualified executive benefit plans. Whenever you 401ks are qualified. In other words, you can't discriminate. Here's the rules. Join the 401k and you offer it to everybody. A non-qualified plan, you can discriminate. It's a one-on-one situation. And I'm going to show you the 162 executive bonus because it's an easy one. It's one that a lot of people could use Kaizen for. There's also split dollars, a little more complex, but this is where the employer and the employee share in the cost. And if an employer can't handle the total cost of the 162 executive bonus plan, this is where they want to go. A little more complex, but that's okay. It works. High earners deferred compensation plans. In a way, the bonuses can become that the deferred compensation plan. That's the three major ones, and I'm going to show you how Kaizen could fit into that executive bonus plan and how easy it'd be. Here's a simplified example, probably not very highfalutin for a lot of employers, but let's say the employer wants to offer an additional retirement benefit to the employee that will closely equal that of a Social Security benefit of $35,000. And some of your employees today don't even believe Social Security will be around, and so offering this optional plan would be good for them. They'd be happy. But so as I said, some don't believe it will be around, but I believe it will be. But here's a way to, well, I want to offer 35,000 to certain employees. Here's the details about the executive bonus. The bonus is deductible to the employer, taxable to the employee as a bonus. Well, the employee would rather not have to pay taxes, but it's really a two-edged sword. If you're if you get the tax deduction now, then you're not going to get the deduction later. And so, and maybe the deduction later is a lot larger than the bonus, the taxable bonus now. So in an executive bonus plan, we have the owner is the employee. The beneficiary is employee named payor. The corporation cuts the check to the life insurance company. Is there a tax plan play? No, there can be a double bonus to cover the additional tax. You could give another bonus just for the tax if you insisted, but I guess I'm the type of guy that said, why would I want to do that? But you're giving the bonus already. But anyway, an executive bonus plan, that's the basics of it. And you can offer it to Bill and not Susan, or Mary, but not Ralph. It's a non-qualified plan, so you can retain the important people by a special one-on-one. Kaizen, as you remember, is a 5-year payment. So I want to give some examples of 5 years. When you get into just a bonus, it's starting to look kind of rich. But if you're just giving a bonus and they're putting into an account that was earning 6.65%, and they wanted income starting at 65, if you gave a bonus for 44,000 for 5 years, that bonus for this 45-year-old would give them 35,510 per year until age 90. So that's kind of our base to understand where we're looking at. Option 2 is using an index universal life policy, IUL. And so instead of by excuse me, getting a little raspy here. Excuse me. Try to get over that. If you use an index universal life instead of a direct investment, you could reduce that 44,000 to 31,000 for 5 years. Same return number in an index universal life, and you could give the 35,000 income starting at 65 till 90, plus you give them a death benefit, plus, depending on the company, you give them disability coverage and long-term care coverage. Remember those things they're worried about? Well, here we're covering 4 areas: retirement income, death benefit, disability coverage, and long-term care. Especially if they're not insurable, are they going to stick around? Yes. Like my friend offering, who is not going to change. These are benefits that they know they need. They just, in some cases, they don't step up and buy it on their own. So let's talk a little bit about Kaizen. We're not going to give you a full course today, and for those who haven't really heard one of my presentations, you can look at the ones online and learn more about it. But Kaizen uses leverage 3 times. So if the employee is putting in, what was that? 31,000. The employee is putting in 31,000 a year. We're gonna do 3 times that by borrowing. So 31, so it'll be 93,000 borrowed money. And this actually gives you more income, and you get more life insurance and more tax advantages and liquidity. This is a great approach for business owners to give something these benefits at lower cost, and gives them all these death benefits and living benefits that they want. Let me skip ahead and then go back to this. So here's how the Kaizen turns out. I use both companies that we use. One is Allianz, the other is National. So in Allianz, by doing the 3-to-1 borrowing, same return number, 6.65, it cost the company $21,400 for a year for 5 years, and then give that 35,000 income until 90. And using National Life, using the same payment, 21,400, their actually return is illustrating lower, 6.45. So it has a little bit, actually, immediate death benefit is okay, and they have the disability even better, really, than Allianz. Anyway, so from 44 to 31 to 21, you can start to offer these benefits to your employees. And in this split dollar theme, you could say, well, I can't pay the 21,000. Let's do 50-50. Now you're at 10,000 something. But anyway, that's the reason why employers are using Kaizen. So why do people like and choose Kaizen? The leverage. That's a really important. Tax-free retirement. Life insurance pays death benefit tax-free, and you can borrow against it tax-free. No market downside. You cannot have a negative year. You can have market-like returns, but no downside. So that's the top tier reasons I think people buy Kaizen. The middle tier, you have the protection, the death benefit, and the living benefit, the long-term care and disability. And that's the number one people should be buying it if they're in their 20s and 30s. 5 years of payments. That's minimal financial disruption, only 5 years. Um, and then you have simplified maintenance. There's not a lot of work to watching these accounts because of the no downside, and you get creditor protection. Um, all the policies are issued out of California. Nevada, and therefore they're actually more protected than here in Utah. And the last tier of things is the specialty uses, gifting to family members. If you're older, is a great way to gift to family who can afford it. It is also, as we've been talking about the executive benefits, that's a higher niche area, succession planning and legacy planning. But these are all the reasons people buy Kaizen, from the top tier to the middle to the lower tier. And we went over this already. And that's the simplistics of the executive plan. If we have the punchline, is that you can offer executive bonus like this without offering it to everybody. And so you can retain that important employee. This QR code is the QR code to start looking at videos and seeing how it works and operates. And you can get, well, anyway, just a lot of things here. There's my phone number, my email, my website, but this QR code will really get you started in the right area. And that's it for today. On Thursday, I have a alchemy traditional webinar coming out, and look to you till next month. Thank you, and goodbye.